Welcome back to In Business. In Europe today, the cost of insuring against sovereign default is rising once again. Irish credit default swaps hit a new record after doubling in the past 2 months. Bloomberg's Judith Bogner is in London with more. So, Judith, what new concern is there now?
Well, Margaret, to say it frankly, investors are increasingly concerned that the costs for saving Irish banks could prove too high and could implicate Ireland's already delicate fiscal position. Also, investors are still not convinced that Ireland can indeed go it alone without asking the European Union for funds. Now, this week, the Irish government is expected to present the final bill for the bailout of Anglo-Irish, and there's great divergence in opinion over how high the bill will eventually be. So far, the government has pledged almost 23 billion euros for Anglo-Irish, but S&P estimates that the number is going to be close to 35 billion euros. And if you put that into context, it would be about 20% of Ireland's GDP. And it's that lack of clarity that has driven two-year yields to 4.7%, the highest level since at least 2003. And at the same time, as you say, the cost of insuring Irish debt against default has more than doubled in the past 2 months. Today it reached a record 521 basis points. And other peripheral countries in Europe were also affected. Take, for example, credit default swaps on Portugal. They reached, they came close to their record high that they reached back in May. Meanwhile, sources are telling Bloomberg that European central banks have indeed been buying Irish bonds to support the market. So the European sovereign debt crisis is far from over.
All right, Judith, thank you for setting us up nicely for the next conversation, because we're bringing in the latest on the Irish government's response to the country's banking crisis. Micheal Martin is here with me. He's the Irish foreign minister. Thank you for coming in today. Judith just painted the picture of what's happening in today's markets. A lot of the concern out there is surrounding the question of the cost of stabilizing the bank that's at the heart of the country's real estate crisis here, Anglo-Irish Bank. $35 billion was the number S&P put on it today. Is that figure excessive? Is that in the ballpark?
Well, I think, first of all, I would make the point that, yes, the cost of restructuring and resolving the Irish banking situation has been very significant and horrendous, but just be clear that the government has a clear pathway out of that, and the central bank are actually working on the precise figures and the certain figures, and will be publishing those towards the end of this week, and that will bring the clarity and certainty that is required by the markets. The governor of the Irish Central Bank, however, has made it clear that the once-off cost and the costs involved in Anglo are manageable from a fiscal perspective, and I think that is the key point. And we have three pillars for recovery. One is the fiscal correction, which has been severe and which will continue. Second is the banking resolution, and we've devised significant mechanisms to deal with that. And it's not all one way, by the way. The final cost of that ultimately will be much less than the upfront cost, but we decided to go upfront in that. And the third one is competitiveness. And looking behind the figures, I mean, unit labour costs in Ireland have come down 6.75% compared to our European peers, and exports last quarter went up 7.5% on an annualised basis. So industry is humming in Ireland. The multinational sector is particularly buoyant, and exports of both services and manufacturing goods are really going very well. Clearly there's concern out there. We're concentrating on dealing with the concern that's in the marketplace, first of all by having certainty on Anglo by the end of the week, and the budgetary outlook will be published mid-October, which will outline the pathway towards the fiscal correction that I spoke about earlier.
You said clarity on Anglo-Irish by the end of the week. The market very focused today on that $35 billion figure. By the end of the week, will we hear that that figure is excessive?
Well, as the Minister of Finance said today, but what I would say about that is analysts, both in the private sector, Deutsche Bank and others, have said that the concern about Ireland is somewhat overblown. That's in the private sector. IMF, European Central Bank, European Commissioner Olli Rehn, Jean-Claude Trichet are all saying that one should not overestimate the impact on Ireland, and that Ireland is on the correct path to consolidation and to economic recovery. I think it's important to bear in mind the analysis of others as well.
On Wednesday, the Parliament, the Dáil in Ireland, will reconvene after 12 weeks off or so. Within that time period, the story of economic growth has now turned around into one of contraction. Are further budget cuts necessary?
Well, there will be budget cuts, and we have already made that clear.
Beyond those previously stated,
well,
because you did take austerity measures early on, upfront about that.
We've taken, in essence, about 7.5% of GDP out of the, if like, the budget, in terms of mostly on public expenditure cutbacks. We've cut public service wages, we've cut welfare rates, and so on. And we said we would do $3 billion in the next budget. The Cabinet are currently addressing that issue, and as I said, the budget outlook will be published in mid-October, and certainly it's a minimum of $3 billion, and we want to give a clear signal to the market on the fiscal side that we're being very firm about it. And I would just point out that in Ireland, it's an export-driven recovery we're looking at. So domestic consumption is not as significant a part of the Irish economy as it would be in the US, for example. So exports and imports are about 160% of GDP in Ireland. So we're very much dependent on an upturn in Europe and indeed in the US for our goods and services. And in terms of internationally traded services, we punch away above our weight. So that's where we're pinning all our hopes in terms of economic recovery.
Well, I want to ask you about, when you talk about exports and dependency there, the question of the stability and the strength of the euro, very much a factor. More broadly here, we're hearing so many countries talk about devaluing their currency or talk about the competitiveness factor. I want to have you give us a more global context when we come back in 2 minutes. More with Irish Minister of Foreign Affairs on Ireland's economy, its banks, and the broader global picture. Welcome back. We're continuing our conversation with Ireland's Foreign Minister, Micheal Martin. Thank you for continuing this conversation with me. I want to ask you, tomorrow Parliament reconvenes. Talk to me about the question of political stability or instability, because there has been quite a lot of speculation that perhaps the majority party, yours, won't be able to hold on to that level of support there. Are you concerned about political instability affecting your economic programs? No,
I think we will hold on, and I think there's a general convergence within the political system in terms of the need to correct the budget and to go for the route of fiscal correctness and austerity. But of course, we're in partnership with the Green Party, and the leader of the Green Party and their own Taoiseach have made it very clear that they're there for the long haul. And of course there are independents then who support that government. And we're satisfied that we will go the full distance. And obviously in this economic turbulent period, you'll have rocky rides and issues will arise from time to time, but we're very, very determined to see this through for the benefit of the country. Even though there had been calls for the Taoiseach's, the Prime Minister's resignation and the like, is this actually going to cause investors concern? No, I mean, there's no evidence that issue itself is causing investors concern. I think we discussed earlier the core issues that are causing concern on in the marketplace, Anglo and so forth. The political stability issue is not having that impact. Talk to me about Ireland's place in the broader European picture here. I mean, how do you feel about proposals to strengthen EU sanctions against countries that break budget rules? Well, as a member of the Eurozone, we actually welcome better governance, better compliance within what we call the Stability and Growth Pact. That is to say that there should be convergence across member states in terms of deficits and so forth, because I think we must learn lessons from the economic collapse that has occurred. And part of the problem was, in terms of the proper interrogation of statistics and data in the past, it wasn't what it should have been, and there probably was slippage in terms of compliance and convergence with deficit parameters and budgetary benchmarks. So you would be in favour of sanctions? So we're in favour of that. Now, sanctions, I think, there are certain types of sanctions. Our view is that there shouldn't necessarily be treaty change to bring in new sanctions. Okay. All right. Thank you so much for spending the time with us. You're very welcome indeed, Margaret. I appreciate it. Stay with us, all of you. We have to end this.